MLIV team to talk once again about the Fed. Weirdly, though, the story has evolved. And from this time to yesterday, JOLTS is better. The labour market doesn't look quite so challenging. Is there more of a case today than there was yesterday for this hawkish cut that potentially the market is now looking for?
Yeah, I mean, I think on the aggregate, the data's already, it's been pretty good for a while now.
Yeah.
Yes, JOLTS was a signal yesterday, but I think actually we got more of a shift earlier in the week, as in we are getting kind of hawkish pre-positioning this week as we start to think about hikes next year. And I think what's super
hikes in the Fed?
Well, I mean, I think hikes elsewhere, but I'm certainly thinking about the possibility of hikes from the Fed next year.
Okay.
But I think what's interesting is, as you've seen markets think about these hikes, and a lot of that's been centered around Europe, with Schnabel comments being more hawkish, the dollar's actually gained. And I think that tells you what's going wrong in terms of current pricing, because it says, yes, you're thinking about ECB hikes, but European growth is meant to be lower next year than this year. Inflation's around 2%. There are downside risks there. Whereas in the U.S., you're thinking about 3 to 4 cuts next year in a global environment where you could have hikes elsewhere, and you have inflation closer to 3%. And so I think certainly while we've had pre-positioning for hawkishness, more of those cuts can come out if we have more commentary skew that way later today.
Are you bracing at all for any kind of overheating then of the US economy next year, Skylar?
Yeah, absolutely. That's something I'm worried about. I think we already have pretty strong growth. And it's interesting when you look at the Fed projections for the economy, I don't think they'll get a lot of attention because they're unlikely to change. But we have a 1.8% growth projection for 2026 from the September meeting. That's the same thing they were forecasting in the first quarter of this year. And I think the idea is there's so many policy changes that have happened. Yeah. There's uncertainty about what that actually means for the economy. And so you kind of just forecast something closer to trend and watch how the data comes in. But the economy is resilient. You're getting fiscal into next year. You're having monetary ease. Financial conditions aren't particularly tight. So I think as you have inflation at 3% and you have inflation that's both supply and demand driven, meaning that tariffs can feed more persistently in, you need to worry about it.
Okay. Can I just come back to the ECB? Got Villeroy out this morning, Bank of France. Bank of France will raise its growth forecasts, talking about better growth. The Germans, at some point, and we're starting to get the details of it, are going to spend some money. Are we underestimating growth in Europe next year?
I mean, we've had downgrades already in that growth outlook for 2026, but it's not been huge, and I'm actually skewed more that way because I think there's this broad expectation. I think currently market pricing, if you look at Eurodollar versus growth forecast, it's not caught down. But we had this expectation you'd get broad stimulus in Europe. You haven't really gotten it anywhere other than your Germany core. And the German stimulus is being redirected to kind of everyday data operations. Around 50% of it is. So I think we're actually still over-optimistic what that growth boost will be in Europe.
Okay, Skylar, thank you very much. Skylar Montgomery Koning from Bloomberg Markets Live. You can get more details. MLIV Go is the function to use on the Bloomberg terminal if you want to find out the thoughts of the Markets Live team.